Only let me say something. Maybe not today, maybe not tomorrow, and maybe not the next month. But only one thing is true. I will be champion one day, I promise.
Pero only one day is true. I will be a champion. Guys, I want you to go into this week with a confident, champion's resolved and decided view regarding your trading. I've used the heart analogy on this page because I personally believe that it takes a lot of courage to believe in yourself, to go after and kick down the golden doors of Wall Street and to get your hands on the treasure that is there. The charts are part of it. Now, that's what I try to share with you guys. I am a technical and analyst for charting stocks and crypto, and that's how I get the confidence that I need to make decisions to buy or sell. I've got one I'm going to go over with you guys today. We're going to cover some news stories. I'm going to take you into the charts. That's what we do on this show. We're making predictions. I'm telling you days and weeks before the price gets to my buy order where it is I'm going to target a buy. Now, we've got a company. They're reporting earnings in the next 16 days. And we're going to take a look at what could play out with this company and the opportunity that it could bring to us to, again, kick down those doors, take a bold decision, look and analyze the risk to reward, and make some money on this stock. I'm going to break it down for you guys. This is the Stocks with Josh show. You guys know I'm traveling. I'm not in my regular studio. I'm hanging out with Larry in Chicago. I'm going to be back tomorrow, and I'm going to be getting myself back into my routine, and I'm going to be sharing some crypto plays on this page. I don't want you to miss those videos, so hit the subscribe button right now. Thank you to everybody that already hit the like and throw a heart and say hi in the comment. But this week, I'm going to be rolling out some crypto trades that I think could be big winners. Now, crypto's the wild, wild west. That means there's no rules in the wild, wild west. It's like a gunfight going after these crypto opportunities. But if you get the right ones early enough, if you identify the emerging potential leaders in this next bull cycle, crypto bull cycle that we're in right now, there's the opportunity to 2, 3, 4, 5, 10x your money. I've got a couple I'm going to share with you. I'm going to be doing the technicals first in the Discord, and then I'm going to be sharing them on this page. If you don't know what the Discord is, it's the Stock Squad Patreon. Myself, Keenan Grace, Stock Mo, and Stock Up with Larry Jones. It's a Discord where we give trade alerts, technicals, and answer questions and share plays. Okay, what we're talking about today, I'm going to do a little overview on the Magnificent Seven and where I think the market's going overall. I'm going to remind you guys that I believe that we will see a correction in the market, but it's going to be minor initially. I think ultimate destination of this market is that we are slowly moving up to 5,500 on the S&P 500. You say, Josh, why do you say that? Aren't the big Magnificent Seven big tech companies getting worn out? Isn't Apple already capitulated? What about your Apple indicator? Well, in regards to Apple, I have come out on a couple videos and said, yes, I've always liked to look at Apple and consider what it means when Wall Street sells this one-of-a-kind company. And I do think that Wall Street has been sending us an early message that as this market went up, they were selling Apple into strength. Microsoft took over that #1 spot. In addition to that, I've shared that I've got fears and concerns regarding the fact that Tim Cook, when he capitulated on making the Apple car, that it was a foreshadowing of an earlier retirement than it's expected, and that's all that the Apple stock would need would be for him to give that news that he was going to begin to step down. And I think that Apple would come under enormous pressure. I've also shared that Warren Buffett, right, bless him, he's getting up there in age, and Berkshire Hathaway, right, their largest position is Apple. And I'm not 100% certain that they would be heavy buyers of Apple stock if Tim retired. And so I see this perfect storm brewing. Just some things to keep our eyes on. In addition to that, we know that this year the Fed has said he's going to give us 3 rate cuts. Now, it seems as if he's pushing that can further and further down the road. which is a concern because the later we get into the year, the more rate cuts he begins to pile on, the more likely the market is going to have a stronger reaction to that accelerated brake that he's going to be applying to the economy. And we already know that when the first cut comes, the market typically gets a 20% pullback. And so we know that we're going to be moving into some volatility this year. Now, some of the stocks, knowing that that is further down in this year, they've been running. I think the overall market is going to essentially do that going into summer. But when we hit 5,500 on the SPX, measuring the S&P 500, that's when I get more and more concerned that we have pretty much gotten to the place that I'm predicting will be the swing high for stocks. Couple indicators for you guys to consider, or at least a couple gauges for that for you to consider, is that we have recently increased market breadth by seeing more companies. 83% of all stocks that trade on the S&P 500 are above their 200-day moving average. So more companies than just the Magnificent Seven are pulling the markets up. When we were at that level before, it was August of 2021. And so, yes, it means the market can go higher, even though some big tech companies have not been the ones pushing it higher, because we now have some breadth. But like in August, there was only going to be 3 more months to 4 months before the peak was hit. And so I wanted you guys to have an understanding of what I think the picture of that would look like. I'm watching 5,500 for a top. Some companies like Apple have already capitulated. There's this 4 companies that have really been the ones doing the heavy lifting. You guys know who they are. That's NVIDIA, Microsoft, Meta, and Amazon. Those are the ones doing the heavy lifting. They have made up 47% of the growth of the S&P 500 in the first quarter of this year. Now, I'm going to get into a company that's reporting earnings in 16 days, and I'm going to give you guys my thoughts on the charts, and I think that it's going to potentially be a good risk to reward scenario that you need to be watching and be preparing yourself. Perhaps what I'm going to be doing is preparing myself with some cash and put myself in a position to buy at the right price, at a strategic price. And the company I'm talking about today is going to be Tesla, right? You know that I love Tesla. I've been buying Tesla, but I believe that there's going to be this bigger opportunity. Now I'm going to take you and show you some things in the charts. We're going to look at support and resistance. We're going to look at some patterns, and I'm going to make a case for you. But before I even get into the charts and show you where my buy signal and potential, resistance levels are, I want you to be aware there's no replacing Tesla. Someone says, well, Josh, you've been telling us that BYD's been adding competitive pressure to them. And yes, there's competitive pressure, but make no mistake about it, they are in that #1 spot, bringing innovation. Companies go through these swing highs and these swing lows, both technically and with fundamentals. Now, we know some of the things that have dragged on the stock. And we know that Wall Street takes positions for or against a company in advance, right? And so my argument today, my fundamental argument on Tesla today, is that a lot of the bad news has been priced in, but not all of it. So we have one more earnings where I think it's going to be sort of that perfect storm of negativity and FUD that's going to push us down to that final oversold condition where it would be the best risk to reward. So, and what I'm saying that I don't believe is going to happen is I don't believe that's going to continue on and on and on throughout 2024, just perpetual negativity. No, I believe that this has already been priced in, a lot of the negativity. We're going to see a bad earnings here in 16 days, and that's going to bring us to a level where it makes more sense to take a risk position. And I don't see us getting back to $100. And I know there's some sarcastic people out there who will say, Josh, it's going to $80. I'm not going to touch it until it gets to $100. Well, I think you'll be too late. I can tell you through spending a couple hours in the charts looking at Tesla, a great conversation with Larry, shared with him exactly what I saw in it. If you really take a step back and analyze that chart from head to toe, what you see is that the price action is smoothing out, right? We had this massive parabolic move when the stock was hot and they were taking over and they were defining themselves as the #1 EV car company in the world. We saw that run up to $400, right? Then, of course, That was not a sustainable up move. There's profit taking. And so there was this reality check that brought us all the way down to 100. But these are really big price movements, okay? But what we're seeing now, we got down to 100. It was oversold, extremely oversold. We went all the way back up to 300. Now we're back to around, we're going to be around that 170, 160 mark. And we are smoothing out price action. And if you are a chart guy, you know that's what the price does. It comes back to the moving average and it begins to smooth out. And there's not enough negative data once we get through this earnings that I believe that there will be to push it down further and further. So before I get into the charts, let me take a very quick station break for the MOOMOO investment app. Guys, if you want to just earn some interest on your money, leave some money parked in an account and wait for the right opportunity to buy, MOOMOO is giving away a great interest rate plus up to 15 free stocks. I want you to click on the link in the top pinned comment if you're interested in more details or your exact offer that's available for you, because they're available in the US, Australia, and Canada. And there's a link for each location and an offer for each location. Check out those details. Okay, guys, we're going to do some really basic chart explanations here. I'm going to talk about the fact that we had these really big descending channels here. And if you understand descending channels are bullish, they break to the upside, right? And we got that here. We got another one here. And we got this final break to the upside. But after that bullish ascending channel, we began to get what I would say is these ascending channels. And ascending channels are bearish. They break to the downside. We've got a number of them. They continually break to the downside. Ascending channels are bearish. They break to the downside. And you can see that ever since that push up that we had earlier this year to 300, all we've really had is a series of ascending channels that have routinely broken to the downside. And guess what, guys? We are absolutely in an ascending channel right now. And it squares up at about $186. And I have been saying for quite a while that this will eventually break to the downside. Now, where exactly is it going to go? I have been predicting that we would hit about 154. But I also, when you look at that bearish pattern that I just outlined for you guys, you also begin to see in a different way through keeping an eye on these charts, you also begin to realize that the price is slowly curling up, right? And so yes, we've got these channels that'll break to the downside, but if you look at that together with the RSI, you realize that it's sort of breaking here, right? The moves are becoming less and less. I'm expecting one more move to the downside, but I believe that that might get us to historic support. You realize that this has been a key level in the past. This general area has been a key level in the past, and I believe that if we do make a higher low, and if we do manage for that to be somewhere between around 157, I believe that at that point we will see some price action smooth out, and I do believe that going in later to the year, we're going to end up getting back to that $200 to $220 level. But so the way this might play out between now and earnings is we absolutely could have a bounce off 174. We could square up back to 186. I believe that we will begin to fail and move down. And I'm going to be identifying 157. The way this works is if 157 breaks, I think 149 is what I would refer to as max pain. And so I'm going to be taking some strong positions around 157. And I'm going to be leaving a little bit of cash to buy it down to 149. All right, so I wanted you guys to have those technicals on Tesla because, again, a lot of people only chase the hype and the green candles at the top of the run. And when they do that, there's often only a final 5, 8, 10% gain to get. We are way beat down. We're going to get lower interest rates this year. Unequivocally, lower interest rates are good for autos and housing. They're good for automakers and housing. We're going to get lower rates, 3 potential cuts. And right now, this is sort of a growing pains moment for a company that cannot be discredited or dismissed, that is a huge innovator, right? I believe that people are doubting how significant robots are going to be in the next 10 years. And as soon as Elon gets a few things squared away, one of them is his compensation, right? But right now, there's a lot of people that know that Tesla is a valuable company. Wall Street has not struck them off the list of viable investment companies, even though Jim Cramer may have, Wall Street hasn't. And when these things get in order, you're going to potentially see the buyers come back in at the right moment. I've identified where we will go. I want you guys to keep it on your watch list. And let me know in the comments section if you think that my predictions make sense. I haven't changed. I haven't varied. I've been telling you this. I recently predicted that 177 would be an area that we would have trouble breaking through. We spent 3 days fighting that level and have pulled back. Ultimately, we could get back to 186. But I believe that we will not break through because I don't think that all of the bearish news, especially this earnings that we're getting ready to get to in the next 16 days, I believe it's going to have problems and we're going to end up down at this lower price. But that is potentially going to be one of the best times to buy if we get there. Let me know in the comments section if you guys agree or disagree, or if you've got a different target in mind for buying Tesla. But I think that very soon, in the next 3 months, we're going to see a $200 to $220 Tesla. That's what I'm planning on. You guys know that I'm going to keep you abreast of my own trading, and you're going to get more alerts in the Discord. So appreciate you guys for joining me today. And remember, pero one day is true. I will be a champion. Take the right attitude going into this trading week and into this investing week and into your work week. And remember to keep your target and your goal in front of you, and don't let anybody or anything keep you from getting there. Peace and blessings. Take care.